Hey, what's up everyone? Welcome back. In today's video, we're going to take a look at GALA. There's something interesting brewing on the daily time frame, and I am going to show you as to what possible price action we're going to see GALA develop in the next couple of days. So let's dive right into our charts. First off, we are going to start off on the weekly time frame, so we can see that the price itself is holding just strongly above our 78%. This area has been tested a few times as an area of resistance back on June 24th, and then now is retesting as an area of support. We can see this longer wick at the very bottom that does show us a quick sell-off in this week, but we are holding very strong. Now, if we're able to break above 0.041, which is a 61% Fibonacci level, then the price is going to come up to the next immediate resistance around 0.045. Let's take a look at some of our indicators to see if that is possible. So taking a look at the RSI here, we see 53%. This does kind of show some neutral momentum, not really pushing towards the bulls itself. Ideally, we do want to see it closer above 55 to the 60%. Possible scenario for a bullish rally is seeing that crossover above our RSI signal line. That's going to give us a clue in if the price is going to come up and retest these areas of resistance, but most importantly, close above it. Now, we do see some struggle in terms of our MACD indicator. We can see these histograms or these bars diminishing in size, but most importantly, the color as well. Basically means that the momentum for the bulls isn't as strong, and that's essentially what we don't want to happen at an area of resistance. So the key areas here, again, around 61% is our immediate resistance. Areas of support is going to be very key here. If we do see a daily or weekly close below 78% of our Fibonacci, this downtrend may be in jeopardy this uptrend may be in jeopardy here as the moving averages are below 78%. So it could be a trend changer on the weekly time frame. But heading over to the daily time frame, this is kind of something that, I hope you guys have patience for me to kind of explain here. But essentially, the Bollinger Bands measure volatility. If the price is going to move very quickly here, if it's going to fall below support, it's considered as oversold. We may see a rebound to an uptrend, or at the very top here, it's considered as overbought. We're going to see a downwards trend. Now, what we're seeing here is when the Bollinger Bands kind of restrict together on a horizontal line. Essentially what it's doing right now, it means it's in a consolidation phase. So there's consolidation, a tight squeeze, and then an expansion. So here, consolidation means where price is moving from an area of resistance found at 0.045, coming down to an area of support roughly above our 78% of our fib at 0.028. This is basically amping out for a breakout, either in an uptrend or a downtrend. Essentially, when the Bollinger Bands squeeze in a little bit, that's essentially where the breakout is going to occur. And if the price is strongly above and closes above our 20 moving average, which is this middle band itself, then it is going to come up and break out on the upside. Same kind of thing reverse here. If it breaks below the 20 moving average in that tight squeeze, the price is going to come down and be considered as oversold. Typically, when that breakout occurs, we normally see these Bollinger Bands expand, meaning higher volatility. Price is going to come up to overbought to oversold. So for example, here, you guys, we can see back in October 18th, October 19th here, price is moving from a consolidation zone. Price was found in this tight squeeze here. We can see this tight squeeze, this pinch. Price moved fairly quickly above the 20 moving average, and then at the outskirts being considered as overbought here. So that's the breakout, and that's essentially where we see these Bollinger Bands expand, and that kind of carries on that momentum of this current uptrend. And if you guys actually notice as well, during this uptrend, it was using the 20 moving average as healthy pullbacks to an area of support and gradually grow further. The reason why I say that here is if we do see a tight squeeze here, essentially afterwards, we do need to see that expansion of these Bollinger Bands to measure the momentum of this breakout. So as we see the last couple of candlesticks here, very small bodied candlesticks. So this does show indecision in the marketplace. We're not seeing dominancy in terms of the bulls or the bears, especially breaking above our moving averages. So taking a look here, we do need to see higher convictions on our bulls or our bears to essentially see where the price is going to come down. Are we going to retest the area of support, or are we going to come up and retest areas of resistance? So we are still kind of consolidating sideways until we're able to see some signs of breakout. In terms of the MACD indicator, this momentum here, yes, it has turned green. Just be very cautious. Signal lines below our zero line, and these histograms aren't as strong as we want it. If we kind of line up the previous price action here of our MACD indicator, these histograms are kind of fairly matched, the same size. We take a look here, that's essentially where the moving average 20 was tested going into this consolidation zone. So this area of resistance, which is our 61% at 0.041 here, we may see that resistance level kind of capped at this area unless we're able to see more momentum indicators. Quickly taking a look at immediate short term here for 4 hours, I am going to take our Fibonacci level chart to see a little bit more immediate targets here for you, and we can see that our golden ratio 61% is struggling just a little bit. However, we have actually closed above our moving averages, so the trend itself is in an uptrend. We can see by making these higher highs and these lower highs going into an upwards channel. Now, if you guys are taking a look at the 4-hour time frame, if you guys are trading in it, in my own opinion here, it does look like we're formulating a hanging man candlestick. So ideally, hanging man has 2 characteristics, or I guess 3 characteristics. It's observed at the very top. It's got a smaller body at the very top, and the wick is twice the size of the body. Now, this here is an exhaustion of this uptrend. It says that there's a huge sell-off in this 4-hour time frame. People that took long positions are probably selling their stocks here for GALA, and that was the long wick at the very bottom. However, we do want to see confirmation in the next candlestick. If the price does close below this body of this hanging man candlestick, the price is going to come down and do a natural correction itself. A kind of example here, which is a great example. Here's our hanging man candlestick and an upwards trend, and the price itself here, followed by the 4-hour candle, closed above it. Price is going to continue to go up. And because this is a strong green candlestick, price continued to go up the next Fibonacci level. Just because we see a green candlestick isn't enough to justify a next uptick towards the next Fibonacci, which is 0.041. So just be very cautious as the current uptrend. Yes, it's great, but we may see that correction come down. So that correction itself is going to be our next Fibonacci level at 0.037. If not, we may see it coming down to our moving averages. But that's it for me, guys, today. I've done a lot of explaining, but let me know what you guys think down below in your charts here for GALA. GALA is going to be one of the coins that I'm going to cover on my video. So in this next week, I'm kind of reshifting the coins that I am covering. Hope you guys still enjoy it. Let me know what you guys think down below. There's only so much coins that I can cover to kind of give you guys consistent updates. So I really hope you guys like the coins that I've picked out. Let me know in the comments. Thank you guys so much for your support. Like and subscribe as well. But I'll see you guys in the next one. Bye.